Hello, welcome. This is Business Now, reaching you live from iBrand TV News Studios here in Lagos. Coming up in a moment, federal government recovers 53.5 billion naira out of 5.2 trillion naira from its ministries, departments and agencies. And Nigeria generates 29.95 billion naira from exportation of electricity. And European Union envoys seek increase in gas supply from Nigeria. Chartered Institute of Bankers of Nigeria's internationally generated revenue rose by 20.3%. Thank you for joining us, and here are some of the stories we're filing at this hour. I am Frank Komalape, and now Russia's economy is on track to contract by more than 10% in 2022, the biggest fall in gross domestic product since the years following the 1991 fall of the Soviet Union. Former Finance Minister Alex Kudrin said on Tuesday, Russia is facing soaring inflation and capital flight while grappling with a possible debt default after the West imposed crippling sanctions to punish President Vladimir Putin for sending tens of thousands of troops to Ukraine on February 24. A previous Russian government forecast envisaged gross domestic product growth of 3% this year after the economy expanded by 4.7% in 2021. A contraction of 10% will amount to the biggest decline in gross domestic product since 1994. According to World Bank and International Monetary Fund data. The World Bank this month forecast Russian GDP output will fall by 11.2% this year. Analysts polled by Reuters in late March had an average forecast 2022 GDP contraction at 7.3%, predicting a pickup in inflation to nearly 24%, its highest since 1999. Now, massive oil theft, among other challenges, is affecting government finances and threatening naira stability. The Central Bank of Nigeria disclosed this in a report by a member of the Monetary Policy Committee, Professor Mike Obadan. According to the report, key challenge to effective forex management remained the pronounced low productivity of the economy, and because of this, the economy was not able to generate enough foreign exchange to meet the high demand for it to import goods and services. Obadan suggested that in the medium long term, it is important to address issues relating to low productivity and limited diversification of the economy in terms of export, high import dependent production structure, high propensity to import and excessive demand for imported goods and services, among others. Reports indicate that crude oil theft in 2021 reached 200,000 barrels per day, a quarter of onshore production, and currently about 500,000, costing the country over $3.3 billion and investors in the upstream oil sector. And now, clearing agents operating in the nation's maritime sector may withdraw their services following the reintroduction of a 15% national automotive council levy on imported used vehicles by the Nigeria Customs Service. NAC had in 2011 proposed 35% duty differentials between imported fully built units and locally assembled cars. The proposal reportedly failed later. But years after the introduction of the levy, the Nigeria Customs Service on Saturday reintroduced 15% NAC levy on used imported vehicles. Speaking on the development, the chairman of the National Council of Managing Directors of Licensed Customs Agent, Port and Terminal Multipurpose Limited Chapter, Abayomi Duyile, said the move could have an adverse effect on the sector. Also speaking, the chairman of the National Association of Government-Approved Freight Forwarders, PTML Chapter, George Okafor, said the outcome of the association's meeting with each members will determine whether the agents will embark on the proposed strike or not. And in the meantime, the federal government has recovered 53.5 billion naira out of 5.2 trillion naira from its ministries, departments and agencies. The Minister of Finance, Budget and National Planning, Zainab Ahmed made this known at the launch of Project Lighthouse Debt Analytics, a reporting platform in Abuja yesterday. She said her ministry was leveraging a multi-layer data mining to recover huge debts owed the federal government by the MDAs. Ahmed said through the consolidation of the project, the government had been able to aggregate the huge debts owed by MDAs in the last 12 to 18 months. She said the Project Lighthouse is an initiative which entails using advanced data mining and analytics techniques to identify tax defaulters, establish their tax liabilities, and send notifications to appropriate authorities for necessary actions. Ahmed said the figures came up from data aggregated over 5,000 debtors across 10 MDAs. Now, the Chartered Institute of Bankers of Nigeria's internationally generated revenue rose by 20.3% to 1.76 billion naira in 2021 from 1.46 billion recorded the previous year. The institute announced at its annual general meeting in Lagos. The year closed with a net operating surplus of 800.14 million naira, and this reflected a 40.3% increase from 570.2 million naira recorded in 2022. At the event, the institute elected Kenneth Okpara as the 22nd President Chairman of the Council. Other officers and the review of the 2021 financial and report. The CIBN says the institute has continued to engage the Presidency, National Assembly, state governments, Central Bank of Nigeria, and the National Deposit Insurance Corporation to play its advocacy role in line with its mandate as the conscience of the industry. And while European Union ambassadors in Nigeria yesterday visited the management of the Nigerian National Petroleum Company Limited seeking increase in the supply of gas from Nigeria to the continent, they harped on how to strengthen its partnership with Nigeria in the energy sector. NNPC Group General Manager and Group Public Affairs Division Malam Garbadim Mohammed made this known in a statement. The EU ambassador in Nigeria, Samuela Isopi, said as a result of the geopolitical situation in Europe, the continent was interested in strengthening its cooperation with Nigeria, particularly, and a possible increase in the supplies of liquefied natural gas. Nigeria is the fourth gas supplier to Europe, exporting at least 40% of its products to Europe. The GMD CEO NNPC Limited, Malam Kyari, assured the European delegation that the company will continue to deepen its historical relationship with EU companies in Nigeria to add more value to its business, particularly towards increasing gas supply to the global market and enhancing domestic gas utilization. And our Green Climate Fund approved nearly $3 billion last year in new climate financing. According to the organization, its portfolio reached the $10 billion mark in Green Climate Fund resources, totaling $37 billion in co-financing. Its annual 2021 report said it supported about 190 projects in 127 developing countries to reduce emission and inaugurate climate resilience development pathways. This year, the fund said it has signed an implementation agreement to scale up climate action across 13 African countries. According to the report, the program implemented by the International Fund for Agricultural Development empowers African national and local banks to direct funds to help farmers cope with increasingly erratic climate effects while also reducing farming emissions. The GCF Executive Director Yannick Glimaric said the agreement reflected a continuing time contraction between funding agreement and implementation. And now the National Pension Commission has frowned at the suggested payment of at least 75% lump sum to retiring workers under the contributory pension scheme. The suggestion was made in the Pension Reform Amendment Bill currently before the National Assembly. PENCOM Director General Aisha Dahiru Maru said the implication of the suggestion is that a retiring worker can decide to take 100% of the money in his or her retirement savings account. The Hero Maro noted that this suggestion was based on a misunderstanding of the concept of pension payment under the contributory pension scheme. She said the proposed amendment also contravened the 1999 Constitution, which guaranteed the right to pensions for all public officers. The Hero Maro expressed her views in a presentation at a public hearing organized by the House of Representatives. According to the Hero Maro, the provision of monthly pensions is central to the objective of mitigating old age poverty under the contributory pension scheme. And our expectations that the price of Nigerian-grown rice would reduce in the market following the unveiling of 13 rice pyramids by President Muhammadu Buhari in Abuja in January have not been met, as the price of the commodity is still on the high side. A recent market survey showed a slight upward trend in the price ahead of Easter celebration, which comes up next this week, rather. That the 50-kilogram bag of rice sells for between 30,000 naira and 33,000 naira, while 25-kilogram goes for between 15,000 and 17,000 in open markets and some shopping malls in Lagos. The celebrated 13 pyramids of rice unveiled by President Muhammadu Buhari, comprising 1.2 million units of 100-kilogram bags of rice in Abuja in January 18, has not been able to effect massive supply for reduced prices of the commodity. The 13 pyramids were said to be the biggest on the continent, with each of the pyramids containing about 115,000 bags of 100 kilogram each. And in the meantime, the first disbursement of rebate to exporters under the RT 200 policy of the Central Bank of Nigeria commences this week, just as the initiative has been adjudged as yielding expected outcomes. According to the CBN Governor, Mr. Godwin Emefiele, who disclosed this while giving an update on the initiative during the InfraCorp term sheet signing with the independent asset managers in Lagos on Friday, said the payment is to encourage other exporters that the era of delay in rebate disbursement is gone forever. He said the idea is to say that we can no longer continue to rely on revenue coming from crude to fund the import obligations of the country. There are at least 4 sources from which foreign exchange can be raised to fund the import obligations of the country, which include revenue coming from crude, export proceeds, diaspora remittances, and foreign direct and portfolio investment. End of quote. And now Nigeria generated a sum of $72 million from electricity export in 2021, a naira equivalent of 29.95 billion naira, using the official exchange rate of 460 naira to the dollar. This is according to data from the Central Bank of Nigeria. The amount generated in the review year represent a 14.5% decline compared to $84.26 million recorded in the previous year, and 49.4% drop as opposed to the $142.3 million received as payment in 2019. In the past 5 years, Nigeria earned a sum of $543.1 million from electricity export to neighboring countries such as Niger, Benin, and Togo and the Republic. Nigeria continues to export power to neighboring countries despite continuous power outages in the country as a result of recurrent grid collapses. It is worth noting that Nigeria's electricity export in 2021 only accounted for about 0.16% of the total $45.92 billion export earnings in the period under review. At $72 million, Nigeria recorded its lowest inflow from electricity exports since 2010 in the year review. Meanwhile, Nigeria's national grid has collapsed several times this year already, with the recent disruptions occurring last week, which caused blackouts in some areas of the country as total energy generation plummeted to 37,964.93 megawatts on Saturday. And our following report that the Central Bank of Nigeria has penalized six banks for 1.34 billion naira over alleged non-compliance with a regulation on cryptocurrency account. An analyst has opined that the e-naira earlier introduced by the CBN can serve as a good substitute. Public affairs analyst Olasunbo Badejoko, who said these earlier in the week on iBrand TV Business Breakfast shows, explained that the e-Naira countered for encountered challenges because it was not well thought out.
So the activities of 5% is not supposed to be too detrimental to the balance of 95% of the population. These are areas that the CBN is looking at. And they are also on their own, seeing how they can plug into the crypto development, which is more or less the current trend. And that's what we talked about the introduction of the e-Naira. The main issue I have with the e-Naira is that, one, it wasn't properly thought out. Then there wasn't enough awareness as regards the usage in terms of the benefits that the people will get from it. All this would have made those who are interested in using crypto transactions to adopt the e-Naira, because the e-Naira would also strengthen the real Naira, which the average people spend, and it would add value to the currency. So the government needs to really do much more, because even they themselves they've not been talking much about promoting the e-Naira now. It's been long since I had that in the news. So except they will have to, if they are serious about it, let them call for a conference about the e-Naira. Let it be presented. Let people hear their opinion. Let them have input in how the currency would fully operate, because it is Nigerian currency that we're talking about here. And it would even be a measure that other countries can emulate. That means we can be having the e-dollar, the e-pound, and whatever, in place of these cryptocurrencies that are out there.
You're still watching Business Now, coming to you live from our studio. Still to come. After the break, Asian bonds record biggest monthly foreign outflow. Bringing more details and more stories after this time out. Please stay with us. Glad to have you back now. If you just join us, this is Business Now, coming to you live from our studios here in Lagos, Nigeria. On the African scene now, the African Airlines Association has released its latest report on airline performance on the continent. According to the report, the projected full-year revenue loss for this year is estimated at $4.7 billion, equivalent to 27.3% of the 2019 revenues. Last year, African Airlines lost $8.6 billion revenue due to the impact of the pandemic, representing 49.8% of the previous year's revenue. However, with the relaxation of lockdown and COVID-19 restrictions in many countries, the associations report that air traffic is expected to rise, but airline revenue remain low, with many operators battling with cash flow issues. According to the associations, jet fuel price hike is generating huge concerns and has the potential to slow down travel recovery. Industry estimates project the impact of the price increase on the overall jet fuel bill will reach about $86.3 billion based on an estimated average price of $115 per barrel. And on the foreign scene, telecoms equipment maker Nokia is pulling out of the Russian market. A CEO told newsmen that going a step further than rival Ericsson which said on Monday it was indefinitely suspending its business in the country. Hundreds of foreign companies are cutting ties with Russia following its February 24 invasion of Ukraine and after Western sanctions against Moscow. While several sectors, including telecoms, have been exempted from some sanctions on humanitarian or related grounds, Nokia said it had decided that quitting Russia was the only option. He added that Nokia will continue to support customers during its exit, and it was not possible to say at this stage how long the withdrawal would take. Both Nokia and Ericsson made a low single-digit percentage of sales in Russia, where Chinese companies such as Huawei have a bigger share. And our world stocks slipped to their lowest levels in almost a month. The dollar held firm and selling gain or again gripped at the world's biggest bond market on Tuesday ahead of data expected to show annual U.S. inflation rising at its fastest pace in 40 years, with U.S. 10-year Treasury yields rising to a new highs above 2.8%, levels last seen late 2018, and ease that an aggressive policy response to inflation from the U.S. Federal Reserve could undermine economic growth weighed on sentiment. European shares opened 1% lower. Japan's blue chip Nikkei stock index shared about 1.8%, and trade in U.S. equity futures pointed to a weak open for Wall Street. In early London trade, U.S. 10-year Treasury yields were up 5 basis points, while benchmark German bond yields climbed to almost 0.88%, their highest level since 2015. And now Sri Lanka will temporarily suspend foreign debt payment to avoid a hard default. The central bank governor said on Tuesday, with its limited foreign reserves required for import of essential items such as fuel, Sri Lanka is due to start talks with the International Monetary Fund on a loan program next week, with the country suffering from prolonged power cuts alongside shortages of food and medicines. The island nation's foreign reserves stood at a paltry $1.93 billion at the end of March, with foreign debt payment of around $4 billion due this year, including $1 billion international sovereign bond maturing in July. The governor said the action was being taken in good faith, emphasizing that the country of 22 million people had never defaulted on a debt payment. JP Morgan analysts estimate Sri Lanka's gross domestic product or debt service will amount to $7 billion in 2022 and a current account deficit of around $3 billion respectively. And our Asian bonds witnessed their biggest monthly foreign outflow in 2 years last month, weighed down by a strengthening dollar and higher interest rates overseas, and analysts expect such selling to continue in coming months. Overseas investors offloaded a combined net total of $7.87 billion in South Korean, Thai, Indian, Indonesian, and Malaysian bonds last month, marking their first net selling since May 2020. Data from the regulatory authorities and bond market association have shown foreigners sold Indonesian bonds worth $3.3 billion and Thai bonds worth about $3.0 billion last month. Malaysian bonds and Indian bonds also faced outflows of about $958 million and $741 million, respectively, while South Korean bonds saw inflows of $279 million, the lowest since December 2020. And now the euro fell on Tuesday, unable to hold onto the post-French election gains, as the dollar held firm, supported by high U.S. yields ahead of inflation data expected to reinforce bets of aggressive monetary tightening. The euro fell 0.19% to 1.0 in early trade after surging in the previous day to $1.95 on the news that incumbent President Emmanuel Macron beat far-right challenger Marine Le Pen in the first round of presidential voting. The dollar's recent gains against the Japanese yen have been most striking. The greenback has gained almost 10% versus the Japanese currency in the past 3 months. It was trading 0.25% higher at 125.6 yen on Tuesday, very close to a June 2015 high of 125.7 touched on the previous day. You're still watching Business Now. Well, we'll take a moment now, and when we return, we'll join Omobolande with more news update. Please stay with us.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services, and meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, yeah. Swift Dry Cleaners Limited, yeah, for clean wash and quick delivery, yeah. Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, Swift Dry Cleaners Limited, for clean wash and quick delivery.
Swift Dry Cleaners, clean wash, quick delivery.